Hello everyone, it's been a while. Today I want to talk to you about Vedanta and the psychology of stock selection. This is a little case study that I want to do on how you can identify such great stocks in a mispriced market. Everyone is going to have their own views. Some are going to say, the management is shady, we don't trust the process, things aren't that great in the company, there's corporate governance issues. But I believe that if you have your own set of process, you have your own conviction, you understand market psychology, you understand the things that are going on, no one can stop you from making a great investment, even in the shakiest of markets and even in the shakiest of positions. So this is something extremely important for us to understand. And I will take you back a little bit to June 2020 when I was able to identify this stock and what was the psychology and the reasoning to get behind this. Yes, again, the standard disclaimer is going to apply. I am not a SEBI registered analyst. Please keep that in mind. I am invested in it from lower levels. Please make your own decision, do your own research, consult a registered advisor, and get yourself educated before taking any action. Okay, this is all completely educational and it's a case study that I'm doing for the benefit of all the viewers. Okay, thank you very much. Let's get into it. Let me share my screen. Okay, so here we are on screener.in and we're looking at Vedanta. Okay, you can see at the top right here, this is Vedanta Limited. Okay, the current price closes around 400 rupees and this is the current market cap. This is the current return on equity, and here we have the TTM EPS, and here we have the return on capital. So these are important ratios for those who don't understand them. This is not a problem. Like, you can read up online, or if you come to one of our courses, you can get the material there. But there's a lot of books that will explain it to you, and there's a lot of places where you would get this kind of information. So just consult people that you trust and in finance, or just keep reading up and be independent. I think this is the best source and the best way you can get this kind of information to understand these ratios. As if you understand 5-6 key ratios, you'll be able to identify these solid bets and these solid positions, and you will be able to take advantage of them when the opportunity arises. So the key thing here I want you to understand is that around this time, like May, June of 2020, somewhere down here, there was an inkling that this stock is destined to do quite well. And one of the main triggers was the founder and chairman of the company, Anil Agarwal, saying he wants to take the company private. Now, when you see this kind of a trigger that, you want to delist the company, it's important to understand the reasoning behind it. What is the reason? Is this person genuine? What are they trying to do? These are all important figures to understand. Now, a lot of retail investors, from what I've heard and gathered, again, this is third-hand information. This is not something I know today, but a lot of people tendered their shares and gave away their shares and exited. They just got scared and they panicked. Now, that is not something we want to do. In fact, when I heard the news that the company is going to be delisted, I was even more interested in finding out what's happening in the company, what the business is about, what is the future potential. Because if an owner is delisting the business, there is a big potential in the business. And this was around when the stock was around 90 rupees, 85, 90, I think 100, like a year and a half ago, almost 2 years ago. So I understood what's trying, like what the situation is, and I understood what the person is trying to make happen at this point. It was very important to psychologically reach that assertion. And what happened then on, I went deeper into the business, the verticals. I understood that the dividend payout is amazing in this company. So at 90 rupees, I thought, even if I get 10 or 15 rupees a year at 90 rupees, that is about 11-12%. That is maybe 15 rupees or 90 rupees is almost 17%. That is a phenomenal dividend to get every single year. And as we've seen, it's just gone on increasing. Okay, so that dividend is definitely a direct return plus the capital appreciation, the capital gain in the stock. Obviously, there was some embedded risk that the corporate governance is not right. Things are all over the place, and there's been a history of the management not being as trustworthy. But I think these are the risks that you need to assess. How much downside do you have? So my assessment at around 90 rupees was that the downside is very, very limited, probably not more than 5, 10, 15%. And that's when I decided, okay, it's probably time to pull the trigger. Okay. So this is the psychology that's important, seeing that there is upside. That's the most important thing. There is solid upside from this position. There's a market leader. Okay. And obviously the delisting and the way you delist from the exchanges, you have to follow due process. I mean, ultimately LIC was able to say that, okay, we want more than 300. So that was another cue. If an entity such as LIC is saying the value of this company is around 300, 315, we're ready to tender our shares when the stock is still 90, 100. Doesn't that relate to a direct upside of 3x? Okay, that's what you need to have thought back then. This was important to think of back then. Okay, now let's just see on the charts how it's managed to play out. Okay. So here I'm looking at TradingView, and this is the monthly chart. So somewhere here you see June of 2020, you can see it's between 90 and 100. It's in that trading range. This is where the identification was made. And you can see the volume at the bottom that continued throughout the year. Now, if I just show you towards the end here, the volume isn't that much towards the end now where we are in the trading range. Like in Jan, Feb, March of 2022, the volume isn't that high. But here you see the heavy volume that was there. Now in hindsight, you can say that, yes, this was big money putting in their funds. And let's just go to Screener and look at the shareholders. Now quick transfer to Screener, and we see, you see the promoters were 55.11% in March 2021, that quarter ending. But you see in June 2021, this is barely like 7-8 months ago, 10% the stake has been increased. Okay, so you can just see how they've bought, how they believe in the company. And again, September it remained the same, but again December, I think kind of a little impatient, and they wanted to quickly get to 75% because they might be thinking that, you know, we want to like delist it again or have some different plans. And definitely if the company is showing solid upside, if you think this is going to become a behemoth and a giant, and you think it's not at its true value, this is a shrewd management we're talking about. So even at 400 rupees or 300 rupees, they'd want to buy back their own shares, because if you believe the price of the stock is 1,000 rupees, 900 rupees, 800 rupees, why wouldn't you buy back your own shares? Where else would you want to invest that? If you get 2x, 3x your money, why wouldn't you want to do that? Okay, so you can see how the management has got behind it very cleverly, and now they're around 70% in the position. So this is December shareholding. March 2022 shareholding is still left. Let's see what happens there. Okay. Now we come back to Screener and we see this whole process play out. Sorry, I'm back to TradingView now. So you see these candles being formed. There's a lot of heavy volume here. Again, there's a little bit of drop because the dividend is being paid out. So I can just mark it out here. You can see this drop right here. Okay, that's because the dividend was being paid out. And again, you see these, the volume over here, the volume bars, they're probably because another set of heavy buying is going. Okay, so probably HNIs, probably from the promoter group, probably associated entities, the ones that know and believe in the story and are able to cut through all the noise of the delisting and, you know, are not in fear of what's happening in this company, they are able to go ahead. Okay. So now when we come to the present day, like at 400 rupees, we've seen that if you were able to just make those simple decisions, like you buy somewhere here, then you get more money, you buy somewhere here, you get more money, you buy somewhere here, you get more money, and you buy again somewhere here. So you see, even if you went step by step and you bought in a investment plan type approach, in a monthly installment type approach, you still end up with a supreme amount of profit. You see that it's broken this high of 2018. It's probably heading towards new highs at like 450, 500. This is the beauty of identifying a large company at a very good value, because then when you buy at these lower levels and you keep tranching upward and you keep allocating that capital and you keep investing into it as and when you have the money to invest. Think about it even today. Like, this is not a buy or sell recommendation. This is simply education, but just think about it today. The management is looking at 13 rupees dividend a quarter. That is 52 rupees. 52 rupees out of 400 rupees is roughly more than 13%. Imagine that kind of a dividend being given into your account. Even a fixed deposit today is at 6-7%. Any debt fund is much lower than that. So just think about that. This is not this is not soliciting an investment. This is not buying or selling. This is just telling all of you to just think about that process. Just think about what's happening. Yes, I mean, the management is going to give shaky commentary. They are not going to tell you the whole story, because obviously they are probably interested in buying back their shares at lower levels, right? But if you believe in the story, if you believe this giant, you need to understand what's happening and what the future is doing. They're getting into the semiconductor space. This is very important to know. If that actually ends up happening, these stocks don't trade at 5-6 P, they trade much higher. So there's so much of upside in that idea. So this video, primarily, the idea was to help you understand the psychology of stock selection, the psychology of investing. What I hope all of you gain from this is know how things work, know how managements think, know how smart money should think, know how you allocate that capital, and know how you decide your risk appetite. These are things that are really important in the stock market, and they'll help you gain millions and millions in the long run. Even if you have a small amount, it's fine. Like, just know how to analyze, know how to take measured decisions, and know how to follow and consult the right people. Please do not get into noise. Please do not believe anyone online or people that don't know about the markets. Why a lot of people blame the markets is because they don't understand the psychology of investing. They don't understand how to cut through the noise. And I'm telling you this, I didn't know a lot of this 10 years ago. I spent time with books. I spent time with a lot of reading materials, networking, talking to people, and paid courses. And that's when I found this system of, screening for stocks and being successful. So I hope you learned from this case study. I hope you learned, how decisions are made. In this limited time, there's only so much I can explain to you, but use this as an example, and please go and study and research more. It's going to help you in the long run. And that index of 15-20% a year, you're going to easily beat it. I can promise you that. You put in the effort, you can easily beat it, because you can take those calls and you can take those positions that are not in the index. Okay, thank you, and I will see you in the next video.